Nitin, thanks a lot for taking the time to do this session with us at Ops Matters. It's an interesting one, that we try to cover every now and then, talking with different folks, especially folks who've both had a long career in an ops intensive business, apart from also, being a founder and building something. So it'd be excellent to sort of understand, how you think about ops as a key lever for growth, how you think of all of these things such as operations excellence, scale, customer success, right? Customer love in the context of a business like financial services with, elements such as risk, regulation, various things that have to be kept into mind. But with that, why don't we launch very quickly into, a brief sort of background on your career journey, and then looking a little bit more specifically at what you've been doing at Navdhan over the past few years, what motivated you to decide to build, and maybe a little bit of background and context setting for the audience on what the business does. So we'll hand over to you and take it from there.
Sure. Well, thank you so much, Rohit. Pleasure meeting you and the folks here. Let me just take the screen and put up a small deck, which will help us, kind of not let people get too bored of looking at my face, perhaps. Uh, if that's okay. So is my screen shared now?
Yeah, perfectly. Please do go ahead. This is awesome. Thank you so much for this.
No, pleasure. So, just to introduce myself, since you mentioned, first we need to tell us about our journey. I have been in financial services space for almost 25 years now, largely in lending businesses at the inflection point of mass markets impact and where credit makes the biggest difference, which is in retail and SME lending segment. As you know, India being, a developing country, that's where the highest impact comes in. In this journey, amongst the other roles that I have managed earlier, I was CEO for Spandana Sphoorty in two different stints and was deputy CEO for a firm called Ashv Finance. Now, just to give a little background of the firms, Spandana was one of the largest microfinance institutions way back about 15 years ago when I was the CEO there, and went through a massive credit crisis. Now, when I say credit crisis, lending industry goes through cycles where there are occasions when the performance of the credit or performance of the loans that they give go bad, and times they are good. Now, the big differentiator between various people in financial services is the fact that if you have managed a cycle, if you have experienced a cycle or not. So just to give a few examples, 2000 before the year 2000 began, 1998, 1999 was a period when there was a big question mark on NBFCs as a model for credit provision. That's when the industry went through some trouble. Then there was a little bit of an over leverage 2007-8 when there was a downturn in the economy. You must have been very young, Rohit, but gray hair on in here would I would like to underline that these are some of the very important experiences or events which allows you to learn from the past and therefore build your operations for the future. Similarly, now 2025 is another leverage linked cycle we are going through. In between, we have had multiple cycles. So Spandana gave me an opportunity to be at the forefront of one such cycle, but it's largely a microfinance firm. Ashv Finance was a venture debt and an SME lending firm. And I worked in a couple of other organizations and then founded Navadhan along with my three other co-founders about 6 years ago. I'll stop here for the moment and back to you.
No, thanks a lot for that, Nitin. And maybe, as we move into the questions and talk a little bit about these different things through context of your experiences, would perhaps also be interesting for folks to know briefly, what you've been building at Navdhan over the last 6 years. What's the motivation? Why do this? I think that'd be fantastic as well.
Sure. So Navdhan is a fintech platform which links the lenders on one side with the rural small businesses on the other side. And why is the need for such a platform? It's because rural small businesses are generally underserved. So they may have banking, but they do not have formal cash flows and documents for the formal institutions to step in. So they largely rely on informal sources of credit. And very important for the economy and for the nation to grow is to let the that part of the middle part of the economy to also come up. Largely digitally, I wouldn't say excluded, but less included. There are kind of an aspiring set of people. So we are building a specialized platform which allows us on one side to service this customer segment, on the other side, make it work for the lenders to come in and participate in this asset class, because we originate loans for them, we service the customers, we do the collections, we do the whole customer life cycle, and lenders can plug and play into our ascent tech platform and participate in these markets. The whole idea is to leverage on the India stack and see how India stack can work for not just the urban class, which is digitally fully included, but also with a class of people, which is a large population, which could be brought into the mainstream.
Got it. Understood. Thank you. I think that's brilliant context. I think now everyone knows, where we're coming from with the rest of the discussion. So we jump right into it. First thing, maybe trying to understand, what role sort of like ops plays, right, in scaling and growing a business. And over there, maybe I start with, question. We love asking this question to all of our speakers, and it means very different things to different people. But for you, Nitin, in the context, especially of fintech or financial services, how do you think of operational excellence? How do you think of ops excellence? What role do you think it plays? How would you define it?
Sure. So I'll separate ops from operational excellence.
Okay.
These are two different distinct topics. Let me take operational excellence first. In a very simplistic manner, operational excellence is a merger of these three pieces. One is where you're optimizing the business processes. Now, these business processes could be automated, the business processes could be manual, or business processes could be the hybrid of the two. Now, when you optimize these processes and make sure that with the least possible input, you're able to achieve the outcomes, and the outcomes are standardized, is one dimension of it. The next dimension of it is whenever you're trying to improve, change, or bring in a new activity or a new process, which could be by virtue of expansion, growth, launching of new geographies, launching of new loan variants, plugging in a new lender partner. Whenever there is any sort of change, the agency for the change has to be pretty tight, and it has to be further part of the standardization. And to make the two happen, you need to have a solid project management framework where you're able to pick up and break down work into deliverables and interdependent deliverables, such that they can be executed in a structured fashion. While I explained this as 1, 2, 3, in reality, all of these are interplaying at all points in time in an organization. So you will have 200 projects running at the same time at various stages. So iteratively making it happen is where operational excellence matters. In a very simplistic manner, these processes are complicated. And if you can simplify these processes by defining them very clearly, it helps you solve for complexity. And whenever you have standardized it, the dependency on people, the dependency on situations, the dependency on tech reduces, and that also reduces the noise. And you're able to focus only on outcomes, and hence standardization reduces chaos.
And Nitin, when you look at this in the context of financial services, right? Like when folks look at banks, they look at NBFCs, at lending businesses, you generally tend to focus only on the financial or the funds aspect of these businesses, right? You may miss the complexity, the operational complexity of the business, just looking at it from the outside in, because it may not always be visible, right? To the end customer, you're making a payment, the money is going, you're applying for a loan, the money is coming, and so on and so forth. Could you tell us a little bit also about what role people, operations, these things play at a lending business, and specifically at a fintech like Navadhan?
Well, let me give 2, 3 examples here, and then kind of make a segue into what you just asked. One is, let's say if Navadhan is trying to, so at the core of the function is to provide good quality customer service. When I say customer service, I want to reduce the touch points. I want to reduce the interaction times. I want the customer to have the desired responses that it wants. I want the customer to feel the need for credit, to be able to take credit and deliver on it. Interestingly, lending is one business where the sale is not completed when you book the transaction, right? So if you're selling, let's say, a soap or a detergent, or even if you're Urban Clap and selling defogging services, so to speak, you provide a service, you pay for it, and you're done. But in financial services, once you've made the loan, the life cycle closes once the last installment of the loan has come back. So the customer relationship at the origination end, when you have approached the customer or customer has approached you, from there up until you've made a transaction, you've disbursed a loan, up until you have recovered the money fully, is a full cycle. And therefore, at all points in time, the involvement of people and technology and the interplay thereof becomes very critical. So coming back to your question on looking at this, the most important part here is to look at it from a scale standpoint and compliance standpoint. So when I say scale, you are not just delivering one cup of tea on a table to, let's say if you're a restaurant, you're delivering tea, one cup of tea to a particular table. If you have to deliver 200,000 such cups of teas and you have the same tray to hand it out with, you need to design it in such a manner that it not only handles volume, but it also manages the complexity associated with growth. Okay? So that's where it starts playing very, very important role. So therefore, you need to build all these systems early. That's extremely critical because sometimes we all in financial services, more particularly, think that, oh, I have X many customers to lend to this month. Therefore, this is how I need to optimize my systems. And you would see this both on the people side as well as on the tech side. Within tech, you will see it on applications side, on resource planning side as well. How much of cloud space do you need? How much of application optimization do you need to do? So all of this starts interplaying. And because it is financial services, compliance here is non-negotiable. And that also because you are audit prone, you have other lender partners, they are also governed. It becomes even more important to see this happening over your workflows, over the whole life cycle of the loan product, as well as general operations of the company. And therefore, all these checks that you embed there eventually prevents you from spending more time, more capital, more energies, and that's where the excellence is achieved.
Got it. Understood. And you said something very important. You said you need to start early, right? And obviously, Navdhan, as you mentioned, you started 6 years ago. The business has scaled significantly since you started. Would love to know how you think about designing, right, the operations at a business like yours. How do you prepare it sort of for scale? I think some part of that you've already spoken. Would also love to understand how this evolves as the company grows, right? Like when you started Navdan, you were focusing on certain things, you're at a different scale, different markets, far more many people working in the organization, many more customers and lender partners, right? What were some of these key operation strategies that, as you look back over the last 6 years that you all implemented? Some of the one or two things that stand out that you consider to be like pretty critical, pretty important for the business.
So I think it goes back to the definition of operations. Okay. So we need, when we are in an early stage, we need to build an interplay between these four elements: the people, the technology, the processes, and the governance around all three of them. When you're thinking, so, somebody asked me, when should a startup think about IPO? And I had mentioned that you should think about the IPO the day you are setting up the company, the day you file your company with ROC, Registrar of Companies, and say that your company's name is going to be Navadhan Capital. That's exactly the day when you should think of the ticker that will run on the stock exchanges. It may happen 10 years later, but the mindset has to be that it has to go there. Therefore, when you start planning, you will always plan future first and you will be less reactive. Hence, when you have to be future first, you will look at people as people who will be compliant, who will be accountable. There will be mission alignment, and therefore you will define the mission more clearly. You will, because all the steps, all the operations that would emerge out of it would emerge out of what is the purpose of the organization. And you would need to heavily invest on trainings. When I say trainings, the way Navdhan started, and just to contextualize it, we have four co-founders who started the business. All of us seasoned in and baked ourselves and turned our hair gray, not in sun, but in the vagaries of financial services. And we decided to hire freshers as our future leaders. And we are building a battery of leaders a full bench of leaders who could potentially allow us to proliferate more of Navadhan Capitals, more of lines of businesses, and therefore ensuring that we spend a lot of our time between the four of us co-founders in grooming, training, and ensuring, and this is both with love as well as with stick, okay, uh, to ensure that they are thinking scale, they're able to build those things. So big mistakes, no problem. Small errors, not acceptable. So those are some of the ethos which come out of it. And then when you think technology, unfortunately, technology is a trap because in tech, you can't think long term. The problem with tech is that tech itself changes every 3 years, every now and then. And therefore, when we started 6 years ago, artificial intelligence was what was defined in 1956. Now, the moment you say artificial intelligence, the paradigm is completely different, right? So therefore, when you think tech, on one side, you have to think of enablement. On the other side, you have to think of, making your operations smoother. But more important than that, you have to think of agility to make change management easier. And change management starts from your mind, and it's not necessarily in operations. Then it becomes, therefore, easier to build processes and bring governance into it. Is it being tracked properly? Is it being monitored properly? Are there continuous improvements based on the feedback that we are receiving, either from the output from the business metrics, or from the customers, or from the team members? So it's an iteration of all the three, which allows you to plan for growth.
Got it. Understood. And do you do any sort of like some of these initiatives, some of the large strategies that you implemented over the years, any of these that come to mind that you'd like to cite as an example, or is it 100 small things that are done right, which is more important than any silver bullet in the context of ops?
But I think both. The first thing I would say is between four of us co-founders, to begin with, even before we put up the company, we were very clear in terms of our inter se roles, and therefore accountability around it, building of what type of teams we would be building, what kind of businesses what we would be building. So recently I was speaking to my investor and I was telling her, I don't need too many ideators. I own the vision of the company. My co-founders own the mission of the company. I need people who can execute on it. And while executing, I don't want them to run blind. I want them to be thinking how to do it better, how to keep improving it. That was the cultural ethos. So I need a learning organization because I cannot afford, as the CEO of the company, to learn 10 functions at the same time. I have limited amount of time in the day. If I can build a culture where one of my team members can come and educate me, that no, Nitin, this plant is not this, this plant is this. No, Nitin, this, the way you look at a vehicle registration number is this. No, Nitin, Claude can do this. If they can stand up to you and explain to you, even if you have a higher authority on them, your ability to learn from them and therefore building a learning organization becomes extremely important. So I'll start with role clarity at the highest level, vision clarity, mission alignment, and then building a continuous iterative learning process where people can come back. Now, it's not always successful. For example, when I read an interesting paper or interesting piece of work, I share it internally in the group. So I have a WhatsApp group called Gyan. The name of the group is Gyan. No conversations, no ladai jhagda on that group, only sharing of Gyan. I realize that I often share more content on it than the others. And therefore, now I'm making it a part of their appraisal process to say that, did you share the Gyan? Now, if it means he's just downloading and sharing, I'm still good with it because some people will end up reading it and it will come up in some of your reviews that somebody has not read it because you'll refer to it and it will not come out. So you have to kind of build pressure to make people learn as well. It's very easy to allow people to go into comfort zones. Now, why do I say this? Because the organizations also go into comfort zones. And you would have seen so many examples of people with successful technologies and products becoming obsolete over a period of time. The last thing I would like to have is obsolescence. I'm building it for 20 years and an institution to last beyond me.
Got it. Got it. As a segue into maybe just the next part, and before we do that, I think one of the things you mentioned in the last few minutes as we spoke about artificial intelligence, you just mentioned Claude in the last couple of minutes. We've been discussing people, we've been discussing processes. Would also love to know a little bit about the role that data, product, technology, these things play in helping you or enabling you to drive operations, compliance more efficiently and at scale. How do people and technology sort of come together to provide a combined capability that's like more superior than anyone individually? Would love to know what role technology plays in the business that you're building.
Sure. Well, I would say that break it down into three small pieces. And at a motherhood level, I would say without tech, the organizations become obsolete very quickly. And financial services is not a differentiated play. Financial services have been there for last 5,000 years in India, right? And so in the other parts of the world. So what can you potentially do new if something has been there for 5,000 years? And the only new you could do is repackaging and leveraging on tech. I was last night hearing Envision Capital's founder, Nilesh Shah, talking on television about which sectors and segments in the listed markets to look at. Now, Rohit, I know that most of the cream in value creation in these businesses from an investor standpoint is extracted in the private space. When you go in the public space, you're looking at 20-25% kind of growth numbers, and therefore there'll be suboptimal, let me say, returns for the listed market investors unless you ride cycles. So there it's more about industry trends, macros, which starts playing. Now, having said that, he also made that statement that even in that space, the differentiation is how well you use the tech. And then we are a startup. So unless we were using it, it won't make any sense. Now, how did it work for us in three different ways? First is it enabled us. Second, it allowed us to use tech or intelligence where human intelligence can be replicated through machines. So first is pure automation enablement. Second is intelligence. The third is allowing you to innovate and offer new products and services to the customers. Now I'll give one example in each space. When I say automation, we all know that the segment that we serve is extremely difficult to service. And banks want to service it, lenders want to service it, but they find the sourcing of these customers, the underwriting of these customers, collections from these customers very difficult. So how do we make it work for them? So we created a specialized niche enabled machinery, and then we linked them through APIs into our platform. So ASIN is a tech platform which allows the lenders' systems to be assessed and API integrated into our systems. So therefore, they're not seeing the customers, they're actually seeing data. So that is one dimension of it. The second dimension is for the customer, he's used to producing papers and proofs about everything he does. So how do you build surrogates in the business such that you can assess the customer better? And the only way to do it is to figure out patterns in various limited data sets, increase the frequency of the low frequency data, convert it into credit metrics, and then be able to underwrite it. Once you have underwritten it, you keep regularly reviewing and optimizing it, right? So this is how we have done it from a data standpoint. So it does mean that you collect more data than what would, from primary sources than what would a normal organization do on financial services. It would also mean you refer to the secondary data in a much more systematic fashion. So we've kind, for example, on the bureau scrub itself, we have built a scrub. On top of the scrub, we have built an AI wrapper through which optical reports shoot out. And it becomes, dumb easy, like a traffic light for people to see and understand if they can go ahead, they should have a caution or they should stop. The third is there are low margin, high frequency products which are today not being offered in financial services. For example, entities like JAR and others are trying to offer savings and liability products to the customers, but there is a big question mark on their sustainability because there's no margin in it. By building some of these anchors and having revenue already sorted by lending, we could perhaps build an anchor where we start offering liability services for which we need to innovate a bit, but without tech, we can't. So understanding data, you start offering parametric insurance services. You start offering unit-linked savings schemes. Now that's not heard of in the last mile. That's heard of in the urban included classes, right? So I would say these three elements of enablement, building intelligence, embedding intelligence, and innovating on the product and services.
Got it. Understood. No, absolutely, absolutely brilliant. I think it's a fantastic way to sort of put, how technology works. And now if you switch gears a little bit, right? Like we've been talking about all of these things, how they help the company, how it helps sort of like manage different processes. But at the end of the day, all of this to a certain extent is for the customer, right? When it comes to creating a positive customer experience, there's a bunch of different aspects that come into play. Maybe before we get into a little bit of understanding, how the way you do things, how operations, how training, how technology impacts customer success. Would just love to understand from you, when you look at lending customers, right, who are different, say, from customers who are buying something on an e-commerce website, right, or somebody who's using some other product or service. How do borrowers, people in the lending ecosystem, customers there, how do they think about customer success? How do they think about brand when they think about which lender or borrower they want to go to, right? How do you sort of look at operational effectiveness and what role it has in customer satisfaction, customer retention, and sort of like loyalty and brand building at Navadhan?
No, very, very interesting question. And let me just take a slide to help. There are two aspects to it. One is real customer value, and the other is the perceived customer value. Now, as people who operate in the space, we need to get both right. And interestingly, while we may dismiss the CX part of it on cred in terms of its utility to create organizational value, it's also a fact that it is putting pressure on all the incumbents to have that kind of a customer experience and this way they kind of design their digital interfaces, right? So that's one example where it may not necessarily immediately accrue, but it does make a lasting impact. So, I remember I used to work for a firm called Times of India before I started in financial services. And I used to order my groceries online from a website called jaldi.com. Now that website doesn't exist anymore, but you have Amazons and so many other e-coms now flourishing. Perhaps they were ahead of their time. Barring that, the whole ethos around not buying it from a grocery store but buying it online, if it is standardized product, if it is a branded product, is an explanation in itself and a lesson for financial services operators like us to say that if you can think of a Colgate toothpaste as a standardized product and you buy it from a grocery store or you buy it online, you'll still get the same Colgate toothpaste, then you're okay and you're agnostic to the source from which you procure. And perhaps your value discovery will be on alternatives. Do I need to go? Because I used to have night shifts. So I used to sleep at daytime. So stores will not be open. Uh, Pricing wise, it would be more expensive, but I was okay to do that. So there would be value props for each customer up until their own limited requirements or their own life limitations. But if you can standardize it, it becomes important. Standardization builds trust, and trust is about getting the same service with the same stimuli again and again. So when you interact with a particular customer service officer, or when you interact with any interface that Navadhan offers, what is the experience you are getting becomes extremely important. How many of you have felt frustrated not calling the IVR numbers of the banks and a
Of course.
resistance to it, right? How many times you felt very uncomfortable entering into an HDFC or an ICICI bank? Sorry, I've been an ICICI banker, but even today, I feel uncomfortable entering into a branch thinking who will look at me, who will not look at me, who will answer, shoo me away from one table to the other. There'll be a queue. I have to take a token. And at the end of it, the guy on the table will say, I don't know. Speak to the IVR. And IVR is exactly what you were trying to avoid. Now, therefore, building trust and building reliability comes with a lot of thinking and design elements to be brought together. These days, for example, in artificial intelligence environment, a lot of people are replacing their last mile customer service or at least the tele part of it with bots and with automation. And you try and experience them. Very differentiated experiences, right? Some of them are very up the curve. Sometimes on places like Ola and Amazon, you go back to the same place where you started from, If you lose a wallet, one of my colleagues and me were traveling to interiors of Karnataka about a year ago. His name is Sahitya. He lost his wallet in a car owned by one such tech firm. And online, he was trying to put a request to say that, oh, I lost my wallet. What is my next step to understand it? And he kept going back in circle and reaching back to the same page, which asked him, please enter. How many times you've experienced that if you take an insurance policy, service is great. But the moment you try to file a claim, you have the hell breaking loose. Somewhere it will say, please file it with the attachment, and there will be no place to put the attachment. I don't want to name the brands. I've personally experienced, as CEO of a fintech firm, I have experienced this in my personal life as well.
Sure, sure.
So I think what is very important here is sometimes people design it for customer failure because they want to sell the insurance, but they don't want the claims to come because the success of an insurance company lies in the claim ratio being lowest. अगर claim ही file नहीं हुआ, तो claim ratio तो अच्छा ही रहेगा.
Sure, sure.
So what you intend to do is one part of the process design. The other part of process design is what do you want to leave as a taste for the customer, and therefore what is the level of trust you are building. Unfortunately, in some of these, I would say sunrise sectors, like insurance is still a baby sector for India. Eh, People still will go back, but places where the day they are able to differentiate between the quality of service provided by various entities, then it start mattering. And therefore, trust is extremely important. Uniformity of service delivery is very important. And the two is achieved through standardization. Standardization could be to enable or to disable a customer. If you've taken a home loan from any of the bank, your process to foreclose a loan will be more complicated than a process to take a loan, right? But at places like Navadhan and so many other such fintechs, the seamlessness with which we allow a customer to foreclose a loan is given equal importance compared to when we give a loan, because foreclosing a loan means financial loss to us. But we want to leave that trust with him that yes, he owns his own loan and he has the ability to take a decision. So empowering the customer, building it in a standardized fashion is where the crux lies.
Got it. Understood. And when you think about this, right, like the sort of iterative process of improving customer experience, delivering the customer promise, is also dependent on actually understanding what the customer is feeling, what they think, how they look, right, at the quality of your processes, your brand, etc. Different touch points, right, when you're disbursing the loan, when you're underwriting the customer, when you're collecting documents, when you're collecting payments or chasing a customer for, say, a non-payment, right, of a loan, which is a daily reality in the lending
Yeah.
space. How do you sort of go about and collect, right, feedback across these different touch points, right? Like how do you measure customer success? How do you understand the whether customer experience is being delivered right or not? Would love to understand, what systems, what processes you all have built to be able to have that visibility on the customer journey and what's happening, where are people dropping off, what's really hooking them in or driving them away, all of those things. Would just love to understand what that system looks like a little bit.
Well, I'll just break it down into two pieces. One is analytical, the other is anecdotal. From an analytical standpoint, you need to build the processes where there are feedback loops available. You need to dig into the data at various stages. So your ability to first have the data anchor points in the system and then pull reports out of that to understand various places and various nuances of that particular workflow becomes important, because the performance of the workflow, when extrapolated with the user's experience, will tell you that. And this is not just customer or the end mile customer as a user, but also your own internal customers. That's also equally important, right? Because if they are thinking what they're doing is relevant and efficient, it will be useful for you to build an organization where people feel valued, instead of saying that, oh, I'm throwing people to a task. And if I have 6 branches, I have 6 support officers. If I have 600 branches, I have 600 support officers. Uh, that's like not really respecting people and the intelligence that people could bring potentially to the table, right? The second is anecdotal. In anecdotal, it's extremely simple. It is about culture. You as a CEO of the company, how often do you travel and meet the customers yourself? And this is not just for photo op, right? We all know Aditya Puri of HDFC Bank. He created a fabulous organization. He used to often travel down within Mumbai and some other areas and get his photographs clicked with the customers. That may be just for his own personal brand building, but please understand it has a ripple effect down to the organization where people are able to see that a CEO is also able to go and meet the customer. Therefore, it's the in thing. You need to meet the customers regularly. In our corporate office, we would have people who would have never even seen customers because they would like to believe that it doesn't matter. Somebody who's handling legal and compliance has never met a customer, has never experienced what the customer experience looks like, what could potentially go wrong, where customer could misuse the system. And therefore, you are missing out on what the deserving customer needs. Right. So therefore, the second part being anecdotal is where you build a culture where people are touching bases. People have open-minded feedback loops. One is structured feedback, the other is unstructured feedback, where you can go meet customers, meet your employees, and have a situation where they can open up to you.
And along these lines, right, of building a customer-centric approach, right? I think one of the things that you mentioned was sort of like from a top-down perspective, building this culture is very important. But even otherwise, any thoughts on, how you get people to be motivated, to understand that, yes, you are in some position of, say, authority over financial decisions that you're making, say, on requirements that other people have. But how do you sort of like ensure that there's a lot of empathy, you manage the customers well, and you also maintain a balance, right, with managing risk, ensuring that only the deserving customers get the loan, but at the end of the day still do, whether you say yes to know someone, yes or no, to a particular customer, you do the whole thing with dignity, right, and with empathy. So when you think about like customer satisfaction, you think about risk management, and you think about, of course, the top and bottom line of the business that the teams are sent to deliver. Any thoughts on how you sort of balance all of these things? Advice for folks on how they might instill this sort of inspiration in their organizations?
Well, first of all, we have to understand the customers are intelligent. And let's assume that we, the people who are designing for their delivery, are not intelligent. The moment you have laid that down to say that the customer is intelligent and we are fools, you will have to start trying to justify the amount of stupidity that you could potentially have, right? And therefore start building intelligence in the process. Trust me, if I double click on my own engineering team, half of them have never even imagined the customer experience or the customer interaction point and what those frictions could be. They're still relying on the storyboard and writing codes, right? So all you can do is do a servant leadership, but you can never be perfect. So I'm not going to say that I've cracked the code. I'm also learning. Servant leadership is where you try to do it yourself, try and explain it. I see myself more often, in a courtroom, you have this katgara, right? Standing in a katgara and trying to explain why do I want this to be done? Because that other person does not have that level of empathy that you would want to instill in them. So how do you cover for it? You try to hire young people. Unfortunately, these days, the young people are so dependent on digital mode of information that they are not ready to look at the primary modes of information. Anybody who's 40 plus will crib to you that 20-year-olds do not know the world. They know what Google tells you about the world. They actually don't know the real world. Uh, sometimes on ground, and me and my business head were on ground about a week and a half ago. We prefer to eat a samosa for breakfast, not because we wanted to eat samosa, because that was the only deep fried food available. And the non-deep fried food had so much of flies that we didn't want to fall sick. So some of these decisions, and I'm trying to bring a stupid example just to contextualize it, right? Some of these decisions are very context specific. It is very difficult to build a culture for it, but you have to keep trying. There is no other way. Right? As you know, the guy who ran this Virgin Atlantic Airlines, what was his name? In my young days, he used to be like the Jeff Bezos of the world. Okay, I can't recall the name. So he used to say that you have to train people Because the risk is if you don't train people, they'll be idiots, right? So, and if you train people and they leave, it's all right. So my intention is more to keep working with the team, keep empowering them, keep making them feel that you need to keep upgrading yourself, keep learning your subject, as well as build empathy. But am I successful all the time? I would say no. This is still a work in progress, and I think it will stay a work in progress for a long time to come.
And when you think about, some of the experiences that you had at Navadhan as you build the business, any examples that you'd like to provide us, where one, you've made certain changes, certain impacts on the customer experience side, which really helped differentiate, which really helped build a lot of customer love for y'all. And just second, in general, before we move on to the next part of the conversation, any other grounding examples you'd like to give on where ops also helped y'all scale?
Well, I think I would not exclude, say just ops, but a sum total of it.
Sure.
The ops, the product design, the overall delivery experience for a customer, which was of course backed by ops. I think initially when I used to travel down to the field and when we started out, we used to tell people we are a finance company and we are a fintech. And people used to contest it to me and say, no, you're a bank. You're a digital bank. And I used to continuously ask, नहीं भाई हम बैंक नहीं है मतलब बैंक का एक रेगुलेटरी अलग पोजीशनिंग है इधर नहीं सर आप बैंक हो क्यों क्योंकि आप पे विश्वास कर सकते हैं हम भाई क्यों विश्वास कर सकते हो because we gave them a certain experience. What was that experience? The experience was that we were able to provide them a seamless service. They didn't have to give me any paper. So first it was paperless. Then they didn't have to come to my branch location. So to that extent, it was touchless, right? But this is exactly opposite to what a bank does, right? Banks expect you to produce papers. Banks expect you to come down to the branch. And in that branch, half the time, half the products are not enabled. Even getting a checkbook, getting a demand draft done, depositing cash is an exercise. And you need to be tokened for it. So it's quite contradictory. But what bank still meant is trust. Because ultimately, where is this word coming from? Is the fact that if I deposit my money there, nobody's going to steal it. It is safe. Safety, reliability is where it came from. They felt that our services are reliable, although the service quality was different, right? So the service quality reflection on a bank was only to the extent of trust. Rest, they kept giving us feedback that if you're doing this, why don't you next do this? So this whole idea of providing liability services actually did not come from our teams. It came from the customer visits. They said, for example, a farmer came up to me and said कि harvest season में पैसा ज्यादा आ जाता है तो हम एक घर में एक साइड एक्स्ट्रा रूम बना लेते हैं या we invest in fixed assets. But once we have spare cash, what we don't know what to do with it. We have to save it for my child's marriage, future, blah blah. What do you do? Why don't you provide me a similar service? So I need to go buy gold to save that value in some form. Why don't you provide me digital gold? Right? But the first layer of trust came in from financial services or giving loans. And then there is a demand to, kind of build on that trust and offer multiple other services that the customer values. I think that was one rewarding experience. The second rewarding experience is that with high amount of automation and process controls, and that comes from experience, I would say, having faced more problems in life than others, is building a fraud-free environment or a less risk, operational risk becomes extremely important. There'll be customers will be defrauding, there'll be your own team members will be defrauding. And frauds would happen at various points of handoffs. And it's a very, very big part of value leakage in any financial services firm, be it a fintech or a mainstream bank. So I think that was the second area where we felt we could make a dent.
Got it.
I
Understood.
think I think one of the last things that you said on the fact that fraud and the operational processes that you set around it really helps you prevent this value leak. I think that's a good segue into understanding a very key aspect of this business. That is, we all always think about NBFCs or any other banking services or financial services companies as that all of their PNL is decided directly by their product and how it's shaped, right? Although to a certain extent that is true, but we often overlook the entire operational aspect behind it on what gets you to the top line as well as the bottom line. So would love to understand for you for Navadhan, how do you look at operations as a key contributing factor to ensure that you meet your top line as well as your bottom line targets?
Well, 3 bullet points, Shogatan. One is we need to overall, while we design any workflow, we need to look at reducing cost to serve or cost to achieve the objective of that workflow. The second is you have an input in terms of time, energy, money, more importantly, energy, which is very transient in an organization, right? So it's not just so people talk about time and money, but it's the energy which matters. So improvement in that efficiency, your input output ratio. And then the sum total of the two should allow you to improve profit margins. I was speaking about, offering the same customer lower margin products. But if you're offering him lower margin products without incremental cost, you're actually enhancing your profit margins. While somebody offering that service standalone itself will not, make a dent. People who have serviced dairy industry through agri fintechs have never survived because standalone, it's extremely expensive to offer that service. But if you have that as a component of your overall service proposition, then your ability to price it comes from your ability to get a cost advantage, right? So operations is all about achieving efficient operations, and excellence is all about iteratively improving it to achieve that last optimal, which is a utopia. So therefore, you need to keep continuously optimizing. And this is where both, tech as well as people would play a role. People have to be accepting change. So I think the interplay of the three, reduction in cost to serve, improvement in efficiency, and enhanced margins, eventually resulting into enhanced profitability profile of the enterprise, is where it boils down to.
That's a good take on this. I think working towards reducing costs is definitely one of the key aspects of operations. Also wanted to know if you have any thoughts about how operations for an entity like Navadhan can actually lead to, say, the top line growth. Can it have a direct or maybe an indirect effect of driving your top line upwards, whether it be through different levers like better customer experience or any other um, areas that you can speak to us about?
Sure. So for this, I'll stick to only lending operations to answer this. So we have just two parts in lending. One is disbursement, the other is collections. लोन बांटना है, लोन वापस ला रहा है. बस ये दो फंडामेंटल एक्टिविटीज हैं. लोन बांटने के लिए what is the input I use? I have a person who's a customer service officer who's allocated to a set of PIN codes and who has a certain amount of time on hand in which he does customer interactions. How can tech improve the quality of customer interactions? Track it to achieve. So there are two things. One is the guy has to be working, so we have to track the person. The second is when he's working, his time and result from that time has to be good. So these are the two factors which play there, which means that you give him so much of automation in his hand that with what he could achieve with a 1 hour discussion with the customer, he could achieve with just 1 minute discussion with the customer. And how do you keep reducing this? So 1 hour reduced to 1 minute is utopian, but 1 hour reduced to 50 minutes, then 40 minutes is a mindset. How do you quickly achieve that? And then there will be friction of all sorts. There'll be friction of connectivity. There'll be friction of, running synchronous and asynchronous operations. There'll be friction of workflow design where you can't go to the next stage unless the first stage is crossed. And therefore, how many times a workflow is asking you to hit the database, right? And come back and ask for a response. So therefore, at the disbursement end, I would say the efficiency of the customer service officer who's going to be interacting with the customer and building customer interfaces in such a manner that they consume less and less time and achieve more and more outcomes. Similarly, at the collections end, the collections drop-offs is the single biggest problem in any lending business. And Rohit did kind of allude to it earlier. How do you create anchors so that you can catch hold of the customer when the drop-offs have happened? Have you built enough monitoring processes? Geotags work, they don't work. Massive failure rates of geotags. I mean, myself, I would have presumed that they work well. But when I myself go on the field and I try and test my geotags, they fail more often than they work, right? So some of these very obvious solutions to somebody using it, I used Urban Clap in the morning for some service, and I didn't have to bother because with the geo link, he came to my house and delivered the service and went back. But that's not possible in rural areas, right? So how do you build redundancies in your processes, backups in your processes, such that you're able to have a business continuity? You're able to get to the customer, you're able to find his alternative phone numbers, you're able to catch hold of him at the right place at the right time so that you get your money back becomes very important. So two aspects: disbursements, collections. And in both of them, this plays a very, very critical role.
And Nitin, maybe one of the other things also, we alluded to in different shapes and forms throughout the conversation, but on similar lines, right? We spoke about customer success, we spoke about scalability, we discussed like profitability. When you think about risk, think about fraud, you think about the less sunshine and fun parts of financial services, right? What role does operations technology play here? Would love to hear, some examples also of some of the more interesting or devious ways in which you've seen, not just at Navdhan but overall as well, where you've seen, attempts at fraud, you've seen things go wrong in certain places with compliance, and how, you can sort of like think about that. And in this day and age where fraud is getting complicated, where people are using AI to like deep fake even things like a video KYC, right? Like, how do you think about staying a little bit ahead of the curve on these aspects?
Well, I think there are two ways to prevent fraud. One is at the design element, you try to imagine where things can go wrong and you try to plug those holes. And at places you build maker checker verifier facilities. That is one way to look at it. The second way to look at it is what we call as hindsighting, which is when a trail of transactions has happened and you trail back and invest substantive time to trail back on transactions and see where possibly things could have gone wrong and where things would have slipped. It may not have resulted in a fraud, but there may have been some slippages somewhere, and therefore have a dedicated team to do that. So I have a dedicated team which is called hindsighting team, and its full-time job is to backtrail the transactions and keep checking and testing where things could have gone wrong. And therefore that becomes an input for the foresighting team. Foresighting team then dovetails into the product function, which allows you to kind of improve on your processes.
Got it. Got it.
That's one. The second is when you observe one such thing, you also need to build a culture for it. And when I say culture, there is this concept of zero tolerance to some of this slippages. And I'm not saying this because it's written on the slide here. What happens is if you have a high tolerance, you can have high tolerance for mistakes. But if you have a high tolerance for certain behavioral aspects which allude towards potential fraud, then you should not have any tolerance to it. Cut it out right then. These are cancerous cells which need to be killed. There is just no other way out. So, and labor laws offer you enough opportunities to terminate people for cause. So rather probably, I may sound very rude in it, but that's the reality of life. Cut the crap when you see a crap. You should not hold on to the crap. You should try and prevent further crap, but cut the crap is extremely, extremely important.
Got it. Understood. No, thanks. Thanks a lot for this. I think, super interesting examples, context from your side on a bunch of different aspects of how we should think about financial services. I think the last sort of like parting question that I would love to ask is, fintech's a super large space for people trying to build businesses in the country, people with or without gray hair, right? And not just in lending, but in wealth, in payments, in infrastructure, in advisory, so many different aspects of where money touches our lives. Any advice that you would like to give, to other founders, especially folks who are even newer, right? Like you've now had 6 years building Navdhan, but let's say folks who've been 6 months into an idea that they're exploring or a business that they've just started building in this domain. Any parting experience, any parting advice that you would like to offer, any reflections from your time having worked in financial services?
Well, let me just use the one word, resilience. Okay. Please remember, resilience is greater than speed. Do not, and when you're pitching your business to outside world, you'll be showing growth, you'll be showing speed, you'll be showing dramatic outcomes. Well, it's good to get capital in by using those tricks, but please trust yourself and your own inner gut to build resilience, both in yourself as well as in your institution. You can slip any minute, you can slip every minute. The cess is very, very high. What is important is to keep your mental balance as well as keep learning on the job, iteratively, keep improving. For me, what worked very well was having co-founders. So I am one of those guys who's going to, antithesis, right? I am an so-called experienced guy because 20 years means people would assume years means intelligence. I mean, I may not agree with it, but nonetheless, I decided to have co-founders. And trust me, they have been my bedrock whenever I have fallen in cesses, right? So it's always good to have complementary people along with you. If not co-founders, build your own coterie of supporters, mentors who can guide you, who can allow you to feel depressed at times, but also pull you up to say that, okay, get back to work, right? There will be enough lows and very few highs in the journey. But for each of the high to come, when I see the training videos of Neeraj Chopra, it's extremely, extremely motivating, right? Nobody sees what he does in his trainings, except when those videos come up only when he wins a medal. But that results in that one show day when he potentially gets or misses the medal. But you cannot. So I keep using this, prepare in peacetime so that you can fight in the wartime. And trust me, running financial services business is a daily war. It's not just a battle, it's a daily war. So you need to be continuously preparing, never get complacent. Resilience is the key. Do not lose heart. Have your own shoulders, enough shoulders around you to cry on. Allow your shoulder to be available to others to cry on. And let things play out. Things will be all right. If your intentions are good, things will work out.
Awesome, awesome, awesome. Thanks so much for this, Nitin, for not just this very informing, but also a very candid chat, right, on how you view a bunch of these things. Thank you, everyone, for taking the time out on Sunday morning to spend an hour with us here at Ops Matters. Uh, Wishing you all a great rest of your Sunday, and thank you once again.
Thank you, Nitin,
Thanks, Shobata. Thanks, Rohit, for having me.
Thank you for
Take care.
putting together this deck and going above and beyond for this particular session that we have.
Yeah, I really, really, really appreciate it. That was absolutely amazing. Thank you so much.